This guy turned $4 into almost $1,000. This guy turned $300 into $128,000. And this guy turned $800 into $28,000. This guy turned 20 grand into 1.4 million, almost 4 million, 4.5 million later, all within the span of only about a week, some of this within the span of one day. How the hell do you do that? So that's what I want to talk to you guys today about, because this has literally been one of the craziest weeks all year, and it all comes down to Tesla. Every single person I know has been trading Tesla. It's only been Tesla, and it's because something absolutely crazy has been going on with this stock. It's insane. So the first thing that everyone's freaking out about is they just had their first quarter ever where they actually had money coming in, which is really, really awesome. And in the long term, I'm not here to talk about long-term prospects of Tesla. They look super cool. They're making a ton of money, and it's been a phenomenal. I mean, they're taking in a lot of orders. They're one of the fastest growing car companies on the planet. They're making factories faster than anybody else can make their factories. It's very impressive. They're really, really, really going quick. But what I want to talk to you is about is sort of I totally missed out on this play, but it was so crazy to see it because of sort of the setup behind it. Here we're looking at a weekly chart, right? So if you look at it historically, right here you kind of have this 200 moving average, and they've bounced off this moving average once, twice before, and every time they've bounced off it, they've done really well. They've gone from 150 to 250. They've gone from 180 to 360. But those kind of returns, doubling your money, making a 50% gain, those aren't the kind of returns that turn, $4 into $1,000. So how do you actually do that, right? That's what I want to talk to you about today, because this has been so crazy. But first I want to look at the stock setup, right? So it bounced off this 200 moving average again right here. It bounced off of it again right here. And what's interesting is usually when it bounces off, it bounces and then it stays up, and then it bounces and it stays up. But here it kept coming down again, and it kept coming down again. And then what happened in April last year was something crazy, is they actually hit this level and they went below it, and they stayed below it for one of the first times ever. And usually when this happens, you can tell that something can really, this happened a while ago with Facebook when they were having this, the whole lawsuit thing with the US Senate on privacy. And Facebook, they went down, and they hit that moving average right here. They hit this 200 weekly moving average, and then they bounced up a little bit, but then they went down below it again. And you can see the second time you bounced through that moving average was a lot stronger for them. But Tesla was a little bit different because they stayed below this moving average for a while. And if you look at it a little bit closer on the daily chart instead of the weekly chart, what you can see is they actually went through a pretty interesting kind of W setup, right? So you zoom in and you really take a look at this, you can see they've sort of got this W pattern, and the setup starts when they go below this moving average, and it ends when they go below this moving average. And as soon as they sort of break out of this W and they go above this moving average again, they start to hit new highs for the first time ever, and they just go straight up after that. I mean, it is insane. And so really, when you're looking at an entry point on this trade, you're kind of looking to buy right around here with a stop loss at the moving average, at the 200 moving average, at about $300, right? With an entry point around sort of 382. And what's cool is this is actually really well supported by the MACD, because the MACD crossed over right here. And you can kind of see historically, whenever the MACD crosses, they go up after it crosses, they go up after it crosses, they go up after it crosses. So they have this really good cross, and then they broke through this, moving average. And what's cool is when they broke through the moving average, they went up really quickly, really fast, right? And when you see stocks move quick, it usually means that they're completing a really strong technical setup. And if you have sort of continued momentum after that, or you have a stable leveling off after that, that's usually when you know that it's a sustained movement, that there's actually a backing behind it, and there's something legit with it, right? And so really the entry here, and I totally missed out on this trade, I wasn't looking at this stock at all, was it sort of 360 when it made that new high in December of last year, right? And so here's the question though, how do you turn $4 into $1,000, right? How do you make that happen? And to answer that, what we really need to do is actually look at the options, right? And what's interesting is if you look at options on Tesla, they really are priced a lot more as of recording this than they were about a month and a half ago, 2 months ago. And the reason why is because they just went from like 200, 300 bucks to about almost $1,000 in the span of like a month, 2 months, which is insanely volatile. And so you can see, you know, if you look at some of these options that are maybe about a month out right now, like these are like $80 for $750 options. These are about, give or take, for calls, you know, 10% of the actual price. For puts, about 10% of the actual price. And that's, you know, fairly reasonable. It makes sense, especially near the money. And even if you go out of the money, if you look at like out of the money calls that are expiring about a month and a half, you're still looking at paying about 5% of the actual stock price to get in the trade. But if you look at these options, which were purchased sort of around the bouts of early January, when the stock was actually more towards, you know, 500 bucks, 450 bucks, these options, this one has an expiration date of February 21st, and the break-even price is 800, so you know that the strike price is somewhere around like 700 bucks, which is really, really, really high considering when you buy this, you know, the stock's only like 500, 600 bucks. But if you look at it from the past, like 500, 600 bucks is super, super, super high, and it already looks like it's gone crazy, crazy high. And so what you're looking here is a concept called out of the money options. And to kind of simply explain this, like here's sort of our stock price, right? It's just, you know, say $640, right? And you can buy an option to buy or sell the stock in the future for a pretty small deposit of what it actually costs, what the actual price is, right? So if you wanted to buy sort of the option to buy this stock at like $650, you might pay, you know, $6, $7, especially, it depends on what? It depends on volatility. So, you know, the more volatile the stock is, the more it's gonna actually cost to buy the option, right? Because it's gonna be more valuable, since a more volatile stock means that it's a better chance that the stock's gonna go up a whole bunch. And what these guys are doing is they're buying options that are way, 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 way out of the money. And they might buy, say, the option to buy Tesla stock at $1,000, and to buy that, they might only have to pay, in our example, $4 for the option to buy 100 shares of Tesla stock at $1,000, because to them, Tesla stock is so much less than $1,000 that it makes no sense to really charge that much. It's only a $500, $600 stock. The chance of it going to $1,000 for most people and these guys, I mean, it's really a far out there shot. But if it does get anywhere near $1,000, what's gonna happen? Well, let me show you exactly what's gonna happen. These options are gonna go from being worth $4 to being worth about $80, especially as you see the stock start to go super, super high, and its highs, it was at, what, 960 bucks, right? And so you're risking a very small amount for the small chance it actually goes that high. But the moment that it hits this level right here, all of a sudden you've got a return of 4,000%. I mean, it's insane. 40,000% on this position. And you have to get out like immediately. Like, you can't just stay in it for sure, because the moment it gets like that crazy high, the moment it gets near what people call like the space price of like nobody thinking it'll go that high, and then it goes that high, like that's when you sell immediately. And you can kind of see here there was this huge daily doji candle where it had really big wicks, and as soon as that happened, it reversed, and after that it's just gone down and down and down and down. And so what's interesting is, like, these guys absolutely crushed it, and they had really, really, really phenomenal gains, literally millions of dollars, because they basically made this giant bet that the stock was gonna go from, you know, 400, 500 bucks to literally doubling to $1,000. And instead of actually buying the stock where they would double their money, what they did is they bought calls that were way out of the money, and they were almost completely worthless. And if the stock didn't ever get to $1,000, they would be completely worthless. But because it got to like 900, 970 bucks, there was so much volatility that these options, they gained a ton of value, not necessarily because of the actual prices, not because of the actual value, but instead just because of the actual volatility that they had, because of the actual time value that they had, based on everyone thinking that Tesla was gonna explode, and all these price estimates coming out that Tesla's gonna go to like $7,000. And as soon as people think that, they're willing to pay $80 for the option to buy it at $1,000, when these guys bought that option only a couple of weeks ago for fractions of a penny. And you can kind of see that right here if you look at the options that expire, if I can ever get to the $1,000 strike price. They've gone down a bunch since the stock came down, but what happened is really interesting. If you look at the quote details and you actually look at the pricing of the options for the past, couple of months, you can see that the price goes from, 12 cents, 9 cents, 5 cents to almost $110, right? So imagine if you could turn like a 12 cent, 10 cents. I mean, that's basically turning, 10 of those, maybe 100 of those. You put in $10, maybe even put in $100, and then out of that comes, $110,000. Now that is not normal. That is not what's supposed to happen with these options. The market right now is so insanely high. And so what we're starting to see at these crazy levels, especially with like the inverted yield curves and everything happening in the economy, is some really, really crazy volatility in individual stocks that's allowing people to make these little tiny investments for the small off chance that a stock literally doubles and Tesla goes, the highest level it's ever been in history. And if that little chance actually pays off, that little chance has a really, really, really high reward. And you're risking sort of a very small amount of money. And if you lose a little small amount of money. But if you're right, if there's that off chance that you're right on these really, really far, far out of the money options plays where you're buying things that are almost worthless, but the stock has this tiny chance of actually going to that price and skyrocketing up there, you can literally create a small fortune in a matter of weeks. It's really insane. It's not normal by any means, but it's what is sort of empowered in a market where if you look at stuff like the VIX, I mean, this is sort of one of those spiking periods in volatility, and you see that over and over and over again. And when you see that happen, you have stocks like Tesla that are literally hundreds of dollars that are trading almost like penny stocks, at least with their options, and it just goes spike, 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 and that's hopefully what we're gonna see again here with a ton of other different positions. Now, you might be thinking, okay, well, maybe I wasn't a genius. Maybe I didn't get in on Tesla when they were like down here. Maybe I didn't buy like super far $1,000 call options when they were, cheap. But what am I supposed to do, right? How can you actually make money even though now, the stock has gone down a little bit? And it's actually gone down a pretty reasonable bit. And what's interesting is, even if you didn't get in on this perfectly, even if you missed everything up until this point right here, and even if you totally missed this day when it went up 15%, or totally missed this day when it went up 20%, and you weren't able to sort of capture these kind of gains where you could literally multiply your money by 1,000% or 116%, so much in only like 24 hours, there's a cool, what you can do is you can sort of day trade the options that expire on the Friday of. Now, I want to sort of segue into this with caution because what happened is most people, they get into investing, they get into options trading, and they don't actually know what they're doing. And sort of a reason why I'm saying this is because on this day right here when Tesla was super, super high and everybody I know was selling and everyone was freaking out like, holy crap, $1,000 strike price, get out, get out, get out, get out, get out. Well, everybody was taking out their money and making millions of dollars. According to this article, shows that there were literally thousands of new accounts buying Robin for the first time ever while it was over, $700, while it was at these new highs. And so what happens is people buy, and they buy based off emotion. They buy based off of people thinking it's just gonna keep going up and up and up and up and up. And the same thing happened with cryptocurrencies when everything was exploding at the end of 2017. You had the price at like $20,000, and people are buying, like, oh my gosh, all it's gonna do is go up, and it's all like based on these emotions. And so you gotta be careful because if you can't trade the stock well, then trading the options, it's just not gonna work. It's like going to a fair and there's a little merry-go-round, right? And that merry-go-round is like trading a stock, right? It's nice, it's leisurely, you buy and you sell at a different price. And whatever the difference is, that's how much you make or lose. With options, it's like getting on one of those machines at the merry-go-round where you get in it and it just starts spinning you around in a circle like at maximum speed where you're getting pushed against the wall with like all of the weight of your body. And what happens is if you mess up, like you're gonna fly off that thing and it is not gonna be a pretty day. So you have to know what you're doing before you actually get on. And it's sort of the same thing, right? You've got to understand how to actually trade the stock before you get into options, or else you're gonna fly off that thing and you're gonna lose your ass, because when you mess with options, you're risking almost your entire investment when you actually make the trade. Now, with that said, I want to kind of show you what my students have personally been able to do. I haven't been trading Tesla because the options contracts in this stock at least for the current expiration dates near the current strike prices, are somewhere around the balance of $40,000 a contract, $4,000 a contract, $8,000 a contract. They're pretty pricey, and for me, like right now, that's just not particularly feasible. But I've had a ton of students that have been trading it, and they're up literally hundreds of percentage points trading Tesla options. And the thing is, what they're doing is they're not holding the position for more than 2, 3, or 4 hours at a time, because holding this stuff overnight, you can see, is extremely risky. If you bought puts and it went up, like, you lose a lot of money. If you bought calls and it went down, you would lose almost your entire investment in the span of, 12 hours, 24 hours. And so what you do is you want to look at it sort of more on a daily pace, and you can kind of use what's VWAP and VWAP bands. These two indicators are absolutely phenomenal. They're literally, like, they've made me so much money. They're insane. If you want to learn more about these indicators and learn more about technical analysis in general, just go on this YouTube channel. There's a free course on Stock Market Secrets Masterclass. You can get it for free, and it'll teach a lot more than I'm able to go in depth in this one video. But basically, all you want to do, you can see this is day when they hit their high. Now, like, for me, like, I don't really know if they're going to keep going up or not, but what I can do is I can see them break below the VWAP and then break above the VWAP and then break below the VWAP and then break above the VWAP, which is this middle line right here. And all you have to do is buy call options, and the call options are spaced out about $20, right? So if you look at the ones that are expiring at the end of this coming week, you can see that, they're about $40 each. So if you want to double your money, all you have to do is have a move that's about $40. And so if you can make the stock move $40, you can double your money. And so that's exactly what you're looking at here on this chart. You can see it goes from, 880 to 940 to 960. And you can see as soon as it gets to that super high peak, pushing and pushing and pushing against the top of those VWAP bands, the moment that it breaks out of this, like, upward wedge, right? The moment when it stops going up and up and up and up, and you can kind of see right here, like, it goes and it's going on this pattern. You can kind of see right here, it's got this pattern where it's going up and up and up and up. But then what happens? What happens is that it stops, right? And as soon as it stops, that's when you buy puts, and within, about 5 minutes, it goes from 940 to 860, which is moving about 80 bucks. Like we said, the options are 40 bucks. So you can double your money just by buying puts and betting that it's gonna go down below that VWAP level, right? And same thing on the next day, right? It goes down, it goes down, it goes down. The moment you see it cross the VWAP, you're in, right? You buy puts, it goes down, it goes down, it goes down, it goes down another 60 bucks. You can double your money on that. Same thing here, right? It goes below VWAP, and then it drops from 740 to 70, so you make 40 bucks there. Same thing here, where it crosses above the VWAP at the beginning of the day, and then you buy calls, it goes from 700, 720 to 780. Double, triple your money on these options. And the trick is, what you do is you're only trading, obviously some of these setups, right, before we get into the options themselves, some of these setups are difficult to predict. Like with this one, this is sort of going up and down and up and down and up and down over and over and over again. And that's a tough thing to predict. And so you want to make sure that when you're making these trades, like, remember that you're multiplying your money, you're leveraging your money, and you're taking on sort of more risk. So you want to make sure that you have really, really solid setups when you actually get into them. And so it just comes down to, like, risk management and actually having experience trading this. And then once you know where the stock price is going to move, and you can understand that, look, it's either going to go up, or it's going to go down, or it's going to go up, or it's going to go down, based mostly on that VWAP. All you have to do is go over to the options, and you want to trade the ones that are expiring, like, the same week, like the week ups, right? So, these options, they would be expiring on the 9th. They would be expiring at the end of this week. It would be expiring on Friday. And so all you do is trade the ones that are expiring on Friday, because if you trade the ones that are expiring further away from Friday, they're going to be like 5 times more expensive, just because they have more time value, right? So these ones cost 3 times more, even though they're only an extra week of time value. Remember, we're not really playing the time value game. When we're trading it on a day trade basis, all we're looking at is the actual value based on inherent value, right? So we're buying, like these guys that bought out of the money calls at $1,000, we're buying not as aggressively, we're buying out of the money calls that expire the same week, and the price might be at 740, and we might buy at, say, 750, right? So it's out of the money, and then it gives you the potential for it to go to 755 or something, and then you have an inherent value that actually gets factored into the pricing of the option. And to give you guys kind of an example, if we look at this day, which was like this was Thursday, and you can see like this is a really good buy opportunity to 700, and then it goes up to 780, and you kind of sell. I would probably leave pussy out and sell at about 760, 750 as soon as it hit this upper VWAP band. And so if we look at sort of the $720 options, which would be out of the money when you actually buy them, when it actually crosses over the VWAP for that February 14th expiration date, which I wouldn't really have been trading. Really, I can't show you this because this is last week option chain, but basically take what I'm about to show you, and I would say multiply the return by about 2, just because you'd be paying about half as much for last week options than you are looking at the options for the coming week, which I can only show you because the last week's options expired last week, right? But anyway, if you look at the 720 strike price and you view the quote details, you can see looking sort of at the, we'll call it the this works, the 5-minute chart. The price went from, you know, 25 bucks a contract, which is about $2,500, 30 bucks a contract, which is about 3 grand, to $250, right? So, you know, you're making what, like, I'd say conservatively, if we look maybe just at Thursday, which was the day that we were trading at, it goes from, you know, 4 grand a contract to 9 grand a contract, right? So you're kind of doubling your money. Or if you maybe got sold out early and you sell at 7 grand a contract, you're making about 80-85% gain within a day. And so again, what you're doing here is you're taking sort of a small movement of about 10, maybe 5, maybe 7%, and you're actually multiplying that movement by a factor of 10 by trading the options on it. And that's really exactly what allowed these guys to have such insane investments and literally turn $300 into $128,000. It's what allows this guy to turn $4 into $1,000. And in reality, this is probably worth more like $5,000 because this was a little bit before they peaked out at about $975. It's what allowed this guy to turn a $20,000 investment into $8 million after this position was taken, after this screenshot was taken. And really become one of the most infamous traders on the planet by making one of the most crazy baller investments ever, and then having that little gamble actually play off. So definitely a little crazy way to invest. For this guy, right, this guy would put in 20 grand. Like his portfolio is probably way more than that, right? Or maybe, you know, he like knew his stuff. For most of these guys that are putting in maybe a couple $100 or $800 or, you know, $50, like their portfolio is gonna be a lot more than that. So this is, remember, it's a very small percentage of their actual portfolio, but it has a lot of upside potential. So you're risking a little bit, but you have a lot to gain from it. And so that's sort of the big message here. And I called my aunt, she has like 60% of her portfolio in Tesla. It's absolutely insane. She's such a phenomenal investor. And I'm like, yo, you gotta sell it like 950, it's gonna be insane. And what's interesting is if you look at like the long-term prospect, people still think that like, you know, it's gonna keep going up, keep going up, keep going up, keep going up. And I don't know, it's an interesting mindset between like active money management versus passive money management. But for me, like, you know, if you can sell and save yourself $400,000 of, you know, losses over the next 4 days, like there's no reason not to do that, right? So I'm sort of in that camp of like, dude, if you can make 500%, 600% a day over and over and over again and turn, you know, these tiny investments into massive fortunes, like that's probably the strat, right? Like why would you buy and hold when you know that this is the top, when you see that this is a doji candle and you know that this is a green, this is a reversal? I don't know. Over the next couple of months, I think Tesla's gonna be kind of more of a market play. The market, like I said, is really, really high right now. I'm not gonna claim to know exactly where they're gonna go. I wanted to buy puts on them right about here, but like I said, the options contracts for like 6 months out, if you looked at those when they were at 890, and even if you look at them right now, those options contracts are really gonna be sort of around the tune, if you're looking at puts, of about, if you're looking at puts near the actual current strike price. Because see, look at how valuable all of these $1,000 puts are. The reason why is because they have inherent value, because the stock's at only, you know, $750, and so these are actually worth something because the stock is below that price, because puts let you sell, right? But anyway, if you look at like 6-month puts around the bouts of $100 below the current strike price, you're still looking at about a $7,000 position, which really just for me, like, and you're risking almost all of that money because it is an option, it just isn't worth it. But what's crazy is just a couple of days ago when they were spiking up to $1,000 and their volatility was going through the roof, these options contracts that were puts for something around the bout of $100, these puts at $100 or so, $200 or so, these puts were almost like about $1, $2, because like there's no chance that actually gets there. But what's insane is because the price went up, and when the price goes up, like the calls are supposed to go up and the puts are supposed to go down, because calls let you buy and puts let you sell. The puts actually went up by a factor of 50%, but only the really, really far out of the money puts. The only puts that went up were the ones that were like so insanely far out of the money that, you know, at like $200, that it would make no sense whatsoever for the price to actually get there. And that's what happens when you have really high volatility, because everything else went down because, you know, when the price goes up, the puts are supposed to go down. But these actually went up by a factor of about 50% because of the volatility. And so just something to learn here and something to see here is the insane amount of volatility that's going on right now with this investment, and sort of using that as a tool to understand, like, the market's crazy hot right now. And when the market's crazy hot, there are phenomenal opportunities like this to really make a lot of money if you know what the hell you're doing. But definitely make sure that you know what you're doing, because if you don't, you could end up becoming sort of one of these thousands of people that lose their asses buying the first stock ever on a company based almost entirely off emotional hype that, like, you know, Elon Musk is gonna save the world, and like it's great, you know, dancing on stage, like, that's awesome. But, you know, you don't want to buy it and then have to hold through that bad. I mean, anyway, that's why you have a stop loss, right? That's why you make smart investments. And really, it's just been a crazy ride in the past couple of weeks to see this kind of growth. And definitely some really phenomenally inspirational stuff. So with that said, thank you guys so much. If you want to learn more about trading, you want to learn personal finance and investing, and you want to figure out how to actually get great at trading stocks so that you can get great at trading options, so you can make crazy investments like this and make money no matter whether stocks go up or no matter whether stocks go down, definitely make sure you check out that free investing course. I guess I'll link it in the description, and that'll get you pretty much everything you need. That'll get you all the foundations, and it'll get you on the road to absolutely crushing it, so that you can do crap like this, which is crazy cool, and you can get on this spinny wheel while it's still up super high. And even when the market starts crashing, what's cool is, like, you can still make tons of bank just by trading puts, right? And that's really all it is buy puts, buy calls, whatever. Make money if it goes up, make money if it goes down. It's really cool stuff, and just really a crazy week it's been with Tesla. So with that said, thank you guys so much. Hope you get a ton of value out of this. Go out there, apply it, and absolutely crush it. Woo! Bye.